And welcome back. A hotter than expected inflation report was released on Tuesday, and this caused mortgage rates to increase to a 14-year high. Current levels right now are the highest levels we've had since 2008, which is absolutely insane. I'm going to be sharing some details regarding that and also some early indicators of home buying demand because mortgage rates have been increasing greatly ever since August 1st of this year. And before I share these reports with you guys, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a house in virtually any parts of the United States, then check out that link below, which is homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. So as you guys all know, the inflation report was released for August 2 days ago at the time of this video, or actually not the time of this video, the time you're watching this video. And because of that, mortgage rates increased to 14-year highs. So check this out. According to the Mortgage News Daily, the average 30-year fixed rate mortgage increased to 6.30% at the time of this video, which is the 14th of September. And again, these are the highest rates in at least the last 14 years. And take a look at this because 1 year ago, average rates were at 2.93%. So that's a 3.37 percentage point increase in one single year. So an increase of 337 basis points in one single year. Also, of something worth noting as well is that ever since August 1st, mortgage rates have been increasing greatly as well. In other words, the average mortgage rate for people with exceptional credit has increased 125 basis points in the last month and a half. And meanwhile, the yield on the 10-year U.S. Treasury note, which of course is tied very directly to average mortgage rates, is sitting at 3.4%. And here's something we're also seeing right now because rates have increased about 125 basis points since August 1st of this year. We're seeing, of course, this pullback in home buying demand because rates have increased so much. So I found this report here according to the Mortgage Bankers Association, or the MBA. They just released this on the 14th at the time of this video, which happens to be my birthday here. I really enjoy making videos, so I want to make videos on my birthday. Anyways, so according to the Mortgage News Daily, mortgage applications decreased by 1.2% from 1 week ago. And this is for the week ending September 9th of this year. And of course, this week's data here includes an adjustment due to the Labor Day holiday here. So check this out. The refi index decreased 4%, but was down 83% from 1 year ago. And this, of course, is why one of the main reasons why total mortgage applications decreased by 1.2%. But their seasonally adjusted purchase index, which of course is an index based on the total number of applications for home purchases, that increased by 0.2% from 1 week ago. By the way, of course, this is seasonally adjusted due to the observance of this Labor Day holiday here. And as I noted right here, this is a slight increase compared to 1 week ago, but this index, which of course is a measure of people submitting loan applications for home purchases, has now decreased 9 out of the last 11 weeks. Now, I want to mention part of this has to do with seasonality of our housing market. Our housing market in the second half of the year tends to slow down. But the other caveat is this increase of mortgage rates, which is causing home buying demand to decrease, of course. And going back to the MBA's report here, when you don't account for the Labor Day holiday weekend here, the purchase index decreased by 12% compared with the previous week and was down 29% from 1 year ago. So when I'm talking about mortgage rates increasing, I want to give you guys an example regarding how this is affecting home buyers right now, because I always talk about this lack of housing affordability across the United States, and it's causing this pullback in home buying demand. We've been talking about that for months now, but let me give you an example. I've made examples like this in previous videos though, but because mortgage rates have increased so much in the past 2 days, this is really going to be affecting home buyers in the months to come here. So take a look at this. The median sold price 1 year ago, this is the median sold price nationwide, according to Redfin, was $348,000 1 year ago. If someone's putting down 20% in order to buy a median price home 1 year ago, and their mortgage rate was 2.93%, which is the average rate 1 year ago, of course, their monthly mortgage payment, which includes only principal and interest, excluding insurance and taxes, of course, would be $1,163 per month. However, though, when you count for prices right now and also rates right now, have a look at this. So the median sold price right now, according to the latest data we have from Redfin, is $370,000. Now, when you account for rates at 6.30% average rates right now, that would give you an average monthly mortgage payment of $1,832 per month. In other words, $670 more per month to basically buy the same median price home right now versus 1 year ago. And that increase of $670 more per month is a 58% increase from 1 year ago. What's interesting to note here is that this increase of $670 more per month is including the fact that home prices have decreased about 6% over the past few months. And this huge increase in mortgage payments is really due to this giant increase in mortgage rates. Again, average rates have increased about 337 basis points in one single year. Now, here's what I mean by that, because the median sold price really peaked for the 4 weeks ending June 19th of this year, when the median sold price nationwide was $394,000, and that was at that time a 13% increase from 1 year ago. But right now, the median sold price is $370,000, only a 6% gain from 1 year ago. So again, by my dumb math, this decrease from $394,000 down to $370,000 is a 6% decrease. But again, despite the fact that home prices have decreased about 6% over the past 3 months, the average monthly mortgage payment has absolutely skyrocketed due to skyrocketing mortgage rates. And because housing affordability is getting worse and worse, we're seeing less home showings across North America as well. So take a look at this. This is according to Showing Time. The number of home showings across North America ever since the middle of July has been negative compared to the first week of this year. So take a look at this. As of July 14th, we had a 0.1% decrease in the number of home showings compared to the first week this year. And we've been in the red ever since then, because right now, according to Showing Time for the, a 7-day average as of September 13th, yesterday, we have a decrease by 10.5%. So right now, the number of home showings across North America is down by 10.5% compared to the first week of this year. And when you compare that to last year, we had a 13% gain. And yet another trend we're seeing right now is a decline in pending home sales, really ever since May of this year. And right now, according to the most recent data we have from Redfin, pending home sales are down 19% from 1 year ago. In other words, we're seeing less contracts being signed between home buyers and home sellers. And also we're seeing a lot of price reductions as well, because according to altosresearch.com, the most recent trends we have right now, we have a 40% share of price reductions. So in other words, 4 of every 10 houses listed for sale right now across the United States have already had price reductions. And by the way, this rate has doubled since May of this year, when the share was only 20%. So clearly our housing market across the United States has been drastically affected by rising mortgage rates. I always say though, every housing market's different though, right? But on a national level, we're seeing some big changes over the past few months. So comment below with your biggest takeaways from today's video. Also, if you got any value of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.